Hey everyone, these days there's a lot of pessimism in the stock market, and it is really crazy to see how the stock market narrative has changed within a few months. Until last year, everyone was gung-ho about this stock market, and today there's a lot of pessimism and panic. Now, as an investor, I have learned that one of the most important aspects in stock market is not just to pick the right stocks, but it is more about human psychology. And we all know that stock market is full of emotion of fear and greed. Obviously, because it involves real money, our hard-earned money. And due to that, majority of time we investors end up taking irrational decisions because it is very difficult to control our emotions. Especially now when the markets are falling and our portfolios are in red. It is difficult to control our emotions. But friends, that is something which is not in our hand. Markets have fallen and the damage has been done. The important question at this point in time is, what can we do to ensure that we minimize this damage? Hence, I was just researching about human psychology and some common mistakes we end up making, especially during the falling market. And I thought of making this video to share my experience and research with you all. By the way, I've recently created a video on how to invest in bear market where I've shared my investment strategy. So if you haven't watched it, then I would strongly recommend watching that video. Alright, let's get started. So the first mistake is wasting time in speculation. I think currently one of the biggest topic of discussion among investors is Nifty और कितना गिरेगा. Everyone is asking the same question and people are wasting their time in speculating Nifty levels. Some people are saying that Nifty will touch levels of 14,500 while some are saying that Nifty will touch 14,000. Friends, trust me, nobody knows the exact Nifty levels. Anyone giving a specific level to Nifty is simply speculating. And I tell you why. Because there's a lot of uncertainty in the global economy. The war between Ukraine and Russia is not over yet. The inflation in the US has not fallen yet. And we are yet to see the impact of high interest rate and high inflation in both US and Indian economy. Considering the fact that the inflation in US is still at 40 years high, US Fed would have to increase the interest rate significantly to control this inflation. And that can even result in recession in the US, or rather stagflation, which is even deadlier where the growth slow down and inflation is at high level. So everything will boil down to the fact that when will the crude oil prices go down to the levels of $70-80 a barrel, and when will the inflation get under the control in the US. And this is something that won't happen overnight. It may take another 6 months to 12 months, but these are the factors that are not in our control. What we have in our control is to spend time in research and identify quality stocks where we can invest our money at discounted price rather than wasting our time speculating Nifty levels so that we can make the best use of this falling market. Now, second mistake is catching the falling knife. During 2021 bull run, even the junk stocks jumped a lot and many people invested their money in those junk stocks. And now that stock market is falling, those junk stocks have fallen even more. So many people make the mistake of investing in those junk stocks and try to average down the prices when the stock price fall. Friends, I'm sure you would have heard this statement, do not try to catch the falling knife. But that doesn't mean you should not invest in stock market. All you need to do is differentiate quality from junk. So utilize this opportunity of stock market correction, but do not average down on poor quality stocks. Just because a stock has fallen 70-80% doesn't mean that it will jump from those levels. So as an investor, whether you are going to make money or lose money in stock market would depend upon how you utilize this opportunity. If you invest in top quality stocks, then you will make money. But if you make the mistake of investing in poor quality stocks, then you will lose money. So the most important task is to differentiate between good quality and bad quality stocks, and remove those bad quality stocks from your portfolio and invest in good quality stocks. Now, third mistake is buying at 52-week low. Another common mistake investors make in falling stock market is they end up investing their money when the stock touches 52-week low. The mistake is not to invest at 52-week low, because if a stock is fundamentally strong, then you can always invest when it falls to 52-week low. But the mistake is to invest all the money in one go. The general notion is that if the stock has fallen to 52-week low, then it will only recover from those levels. Friends, there is no guarantee that a stock at 52-week low will only recover from those levels. It can even fall further. In fact, there are many quality stocks that have fallen to 52-week low, like your Asian Paints, TCS, Infosys, Bajaj Finance, Pidilite, etc. So if a quality stock has fallen to 52-week low, then what should you do? Should you wait for it to fall further or should you invest your money? Well, I would say that break your money in equal parts. So let's say 5-10 parts and invest systematically over the next few months. Number 4th mistake is timing the market. Many people make the mistake of timing the stock market. And when I say timing, they try to find the bottom of the market. See, ideally every investor wants to invest when the market is at the bottom so that the investor can generate maximum return out of it. But trust me, nobody can time the stock market. That is, nobody can predict the exact bottom. So let's say Nifty is at levels of 15,000, then people would predict the bottom at 14,500. And when it will touch 14,500, people would make the bottom at 14,000. And trust me, if Nifty touches 14,000, people will make a new prediction of Nifty at even below levels of 14,000. Maybe 13,500 or 13,000. So basically, people would keep on reducing the bottom. For example, during COVID crash, Nifty fell down from levels of 12,000 to 7,500. And when Nifty was at 7,500, I remember people saying that Nifty will touch levels of 6,000. And that never happened. So basically, those people who try to time the market miss the opportunity to invest when Nifty touched the levels of 7,500. So the fact is that it is very easy to look at the hindsight and say that I should have invested at X level when Nifty touched its bottom, but it is not possible to do that in the real time. Nobody can time the stock market. Hence, there is no point waiting for the perfect levels. Just keep investing systematically on every dip. Now, number 5th mistake is sell in panic. Stock market is a place where two emotions dominate the most, fear and greed. During 2021, we saw greed dominating the stock market and investors ended up investing at any valuation. But now in 2022, stock market is getting dominated by panic, a lot of panic. And when people are in panic, they make the mistake of selling even the good quality stocks. The problem is, majority of investors think short term. They spend their time and energy thinking about what will happen in the next 1 week or 1 month. And now that Nifty has fallen to levels of 15,000, it looks like everything is over. And it is the end of the world and Nifty will become zero. This short-term thinking creates immense pessimism and a lot of people end up selling out of panic. In fact, it is the time to accumulate fundamentally strong companies rather than selling. So next time, when you think about selling your stocks, just ask yourself, why did you even buy that stock at first place? What is the business of the company and what are the future growth prospects? I think you will get the answer. Remember that it is not the first time when the stock market has fallen. We have seen even bigger corrections in the past. But stock market has not just recovered, it always made a fresh new high. Now, number 6 mistake is high exposure to specific stock or sector. Another common mistake we end up making during both the bull run and bear market is having a lot of exposure in a specific stock or sector. For example, last year IT and technology sector jumped a lot, and due to that, many investors ended up investing a major part of their money in IT and technology stocks, as high as 50-60%. Likewise, last year, many investors ended up having a very high exposure in mid-cap and small-cap. But now, majority of mid-cap and small-cap have crashed. Now, one of the common mistakes investors make in falling market is they keep on adding a specific stock on every fall. And eventually, they end up investing a chunk of their money in a single stock. Personally, I have a rule that I don't invest more than 10% of my money in a single stock, no matter how good a stock is. Likewise, I make sure that I diversify my money across sectors and not have a high concentration in a specific sector. So falling market will tempt you to add more of your favorite stock or sector, but that doesn't mean that you invest all your money in that single stock or sector. Whenever you invest your money, always keep a check in terms of what is the percentage allocation of each sector in your portfolio, what is the percentage allocation of large cap, mid cap and small cap, and make sure that it is nicely balanced. And also ensure that you don't end up investing majority of your money in a few specific stocks, no matter how favorite they are. Number 7 mistake is watching the portfolio frequently. Just a decade ago, before internet became popular, the stocks were available in physical format and you would have to call your agent to buy and sell shares. But today, you have everything in your fingertips. On one side, this has made investing extremely convenient, but on the other side, it has amplified the emotion of greed and fear to multifold times. Last year, when investors invested their money and saw quick profit in no time, it made them too greedy. And they ended up investing even at very high levels. And now that stocks are in red, there is a huge panic because many people end up checking their portfolio even 100 times a day. And when you see your portfolio down 40-50% all the time, obviously you will panic. So stop watching your portfolio all the time. So in this video, we discuss some of the common mistakes investors make in falling market. Did I miss any mistake? Let me know in the comments. Friends, first of all, you should only invest the money in stock market that you do not need for the next 5-7 years. If you are invested in stock market with an expectation that your wealth would double in a couple of years and you would utilize that money to fulfill your short-term goal, then you have made a mistake. And if you are invested to fulfill your long-term goal, then you don't need to worry. Last time Nifty made a high of 18,450 and I'm sure that next time it will make a new high of 25,000 and then 30,000 and then 35,000. That's inevitable. Indian economy has a very bright growth prospect and stock markets are bound to grow. But during this journey, you might see 30, 40, 50% correction. So only those who will have the courage to see the bottom will be rewarded with the high returns from the stock market. Now this current situation reminds me of this famous dialogue from Three Idiot movie, all is well. If not in the short term, then certainly in the long term. So rather than panicking, it is time to have a relook at your portfolio and balance it properly so that you can make the best use of this falling market. And remember that today's red is a path for a greener tomorrow. If you see your portfolio down 30, 40, 50% without getting too much worried, then only you will reap the benefit of high return. I hope you find this video useful. Also let me know if you want to cover a specific topic. I'll see you in the next video. Till then, take care.